The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we wrapped up Tuesday's trade, what started out as looking like a classic turnaround Tuesday with a lot of green on the screen ended relatively mixed on the session across grains and livestock trade, even the stock market falling well off the highs of the day. Just more volatility being seen across this market trade. Let's take a deeper dive into some of the chart action we're seeing and just get some overall perspective on some of these moves. How can we kind of quantify what we've truly seen in the last several days here and what stands out the most? Let's talk about it. Joining us now for market analysis, Brian Splitt with agmarket.net is here. Brian, it is good to talk with you again, my friend. And man, oh man, what a volatile couple of days it's been in this market trade. I've said it time and time again. I guess if anything, it keeps us on our toes and keeps us busy, doesn't it, Brian?
It does. This type of market's fun for someone like me. I like the market to move. It just gives me purpose in life, right? When the market isn't doing anything, I just twiddle my thumbs. So, but it's difficult. We're going headline to headline and trying to decipher between what headline is real and what is fake. You could talk, yesterday, for example, we had a 400-point rally in the S&P on a headline that suggested that we were going to put a pause on tariffs, and then that just wasn't the case. And then we gave back almost all of that in a very short period of time, just to go right back up to those highs again this morning on some optimism about China, that maybe we weren't going to have these tariffs levied. But then noon rolled around and China didn't balk, and all of a sudden the S&P goes from up a couple hundred to back to unchanged on the day. So the scope of the moves in some of the outside markets are tremendous. But I know we were kind of talking about this offline before we started recording. When you consider everything that's going on around us and how corn is performing right now, it's nothing short of tremendous. We saw the chart from President Trump and the Rose Garden on April 2nd and showing what types of tariffs we were going to see on which countries. And I think if you're an asset manager and you're looking at different commodities and markets and you say, okay, where are we in different markets from that moment when we saw that chart? Corn's up about a dime on old crop corn. And I think if you were to look across the board at just about every other market, whether it's metals or energies, equities, livestock, some of the soft markets, cotton, right? All of them are lower than where they were at that moment. So corn right now seems to be bucking the trend. I think there's a good underlying story as to why it's doing that right now.
Well, let's talk about this a bit because you're 100% right. I've been super impressed with how this corn market has looked, and you hit a couple key points there. As you look at these charts, what stands out to you for corn? Because when I just take a simple view and look at things, and I'm no expert, but I think about the amount of bearish info that's been thrown at this corn market over the last several sessions, yet it doesn't seem like the market wants to go much lower. It just feels to me like we found this area of support here in corn right now, Brian.
We have. And so there's another important date. I mentioned April 2nd, but March 4th was another important date. And that's where a lot of commodities kind of made their initial low after the sharp sell-off from the initial tariff selling, right? So we had corn, old crop, go from call it 520 a bushel in July down to just about 450. And there were a lot of other markets that made lows that particular day. Hogs, soybeans made a low that day. Wheat made a low that day. You can look at some other outside markets as well. But a lot of those markets, and this kind of goes into what we were just talking about, have taken out those early March lows. Where corn, it went back and retested them and held, right? So you've got a pretty strong double bottom on corn during the month of March. And really the nice thing is that we not only went through a lot of the tariff talk, but we also got the acreage report where everyone was worried about big acres, and the acres were big, but we still held that support area. So I think at the very least, maybe corn is in a little bit of a trading range here where July has support at 450. It's going to have resistance at 480. But then there's some other stuff, when I look at July corn relative to December corn, where, you think about December corn right now, and it's just been going nowhere while July and May have been going up. And so that is visible in the spread, right? So you could look at a chart of the spread between July and December, and the spread made lows on March 4th as well. And that was with July trading 8 cents over the D's. Today, I think we finished north of 25, maybe up around 26, 27 cents July premium over December. So over the course of the last month, through all of the tariff talk, through the talk of the acres and all of that, we've actually seen old crop gain 20 cents on new crop. And I think you're in a period here where there's going to be that expectation again. We're going to have a WASDE report on Thursday. Mm-hmm. But, what has the trade been talking about the last two WASDE reports, the February report, the March WASDE report? It's, hey, corn for export is running ahead of the pace to hit the USDA's target. They should raise corn for export. Well, they didn't do it in February just because they dropped the corn for export in January. Then that would just look silly to just raise it right back a month later after you dropped it. But when you go to the underlying reason of why they dropped corn for export in January, it was because the production reduction was so large. It was more procedural. They lost X amount of bushels per acre. It was a lot of production. So just procedurally, they're going to reduce demand to help offset part of that. There wasn't something saying, oh, well, our pace is running lower than what it needs to be, so we should drop exports. So I think you're going to see, again, the expectation, and I don't know if they do it or not. If it's not in April, I think it'll be in May when we get the first new crop balance sheet. But there is reason to believe that corn for export should be increased, thereby reducing old crop stocks. Now, we also think internally the feed number might be revised lower, partially offsetting the increase in corn for export, but still looking for a net reduction in old crop stocks. Mm-hmm. I think that's one thing. And then when you look at the world stocks and stocks to use, it is still a tight story, okay? And if there's any concerns in South America or North America domestically as we get into our prime growing season and we get that summer weather rally, I think world buyers, if they're concerned, they're going to go straight into our old crop and they're going to buy that. So I think you're going to continue to see old crop outpace new crop, especially if planting weather is good, because there's going to be a sense again that as we get towards late in June, that maybe those corn acres are actually going to be even higher than what they were on the March report. So I think you got multiple things here, but boy, old crop specifically has been performing very well. If nothing else, new crop in the face of big acres and all the tariff talk has been treading water, which I think is a victory in and of itself.
And so your last point, I think it raises a good thing for me to ask you. It doesn't feel like, especially corn, but even beans, wheat, et cetera, we don't have a lot of weather premium built into these markets right now. It doesn't feel like, Brian.
I think put it this way. If we were to have, 95x million acres of corn, and we grew a trend or close to trend yield, we will be lower come fall. So I do think there is some sort of unknown, risk that is in the market, but I don't think there's enough considering the conversations we're going to have in a month or two. So I do think there is some weather market premium in there, but I think there's going to be a heck of a lot more, especially when we kind of think about, we talked to Eric Snodgrass quite a bit. Yep. He's one of our favorite, if not the favorite, weather guy that we do business with in the industry, and he's been very consistent about his messaging over the last several months and what he's watching for as far as, hey, this is what has me potentially worried going into the summer growing season. And a lot of what he's talked about of, hey, if this happens, has continued to come to fruition. He was talking about the most of the precip as we get into planting would be in the Eastern Corn Belt, right? And that's that setup where if that continues, and then we watch like Southwest Texas and into Mexico, if that dryness starts to creep north. So over the next 30, 60 days is going to be really important, but I think there's going to be a lot more weather premium. And plus just, we talk statistically, where now that we know our February price averages for crop insurance, then you look back historically and say, all right, 20 out of the last 20 years, we've traded above that spring guarantee at some point down the road. It just makes it feel like, should you really be super aggressive to market 450 December corn when your spring price average is 20 cents higher? Do you get super aggressive marketing new crop soybeans when your spring price average is 65 cents higher from here? It just doesn't seem like, and I'm not going to say there's not short-term downside risk, but if I'm selling beans today, it's definitely not a sale I'm trying to make for next fall.
We're talking with Brian Splitt from agmarket.net here today on Market Talk. In terms of soybean or wheat charts, Brian, or I'll throw cotton in there too, any other commodities there that you are keeping an eye on? Anything big standing out to you in any of those markets?
Talk wheat briefly. I think wheat maybe hasn't performed quite as good as corn, but it's at least been holding its own. We haven't seen new lows for the move during all of this talk, so that's good. When I think about hard red wheat, specifically the Kansas City variety, we're in a very big trading range where 550 is the low end, 650 is the upper end. And we do have a seasonal tendency from like that late March, early April timeframe into late April, early May, where you do typically see some strength in winter wheat. We're going to be going into where we're going to getting more of these condition ratings for winter wheat. So we'll see if maybe that's something that can provide some support since we are closer to the lower end than the upper end of the trading range overall. On soybeans, beans have gotten beaten up as of late, but in the big picture still, we're holding the lows that we made in December when we were all worked up about how big the South American crop could be. So here we are. It's now April. We've gotten through South American soybean harvest. We didn't take out the December lows. We haven't taken out those lows through all of the concerns about tariffs and Chinese retaliation. And again, that could still happen, but I'm looking at some gaps above the market. May soybeans have a gap at 1024.5. That's right about where the 100-day moving average is. I think if there's any short-term positive headline news, and maybe it's something from the report on Thursday, we might go right back up and try and fill that gap. So again, I'm not super interested in pressing the short side of the soybean market below $10 in new crop, really below $10 in old crop for that matter. And I think there's going to be opportunity to sell higher prices again down the road. And then in cotton, that's another market where structurally and technically, before that April 2nd Rose Garden ceremony, cotton looked like it was bottoming. We had taken out some downtrends. The new crop cotton looked like it was trying to build a little bit of a head and shoulder bottom. And then the market opened up that night after we had the tariff chart and gapped lower. So that's another market that has a gap that's going to be an upside target. And with cotton, you're firmly entrenched below government support levels. So I just don't see the producer right now being a willing seller and participating in the market from the sell side at this point. So I think we're more inclined to see a short-term wave of short covering from the funds because of the government support levels. And they might need to cover those shorts as we get to the expiration of the May contract. So that makes that gap above the market a very viable target for cotton as well.
All right. I want to ask you about the stock market. I think this can help us segue into livestock, cattle specifically. I know you have some thoughts on the S&P 500 charts. Obviously, again, immense volatility, whether it's the Dow, the NASDAQ, S&P, et cetera. What are some things chart-wise that stand out to you as you look at the financials, Brian?
Right. So I think yesterday's low is going to be a absolutely crucial low to hold. And I'm going to give you 3 reasons why that is. Number one, and I'm going to go back a little bit in history. When we made lows in the stock market during COVID, that was in March of 2020. That was a major low that was set. And then that base, we saw a rally that continued all the way into January of 2022. And that was right before the invasion of Ukraine. All right. Now, from that high in January of 2022, we pulled back into October of 2022. We gave back half of the rally from the COVID lows, okay? That low was then scored in October of 2022. From that October 2022 low to the highs we just made this year, yesterday's low was exactly half of that, 48.32 to the tick, okay? Now, when you look at that high that we had made previously, which was again that January 2022 high, that was just above 4,800 at 4808 and a quarter. So now we're getting back to some old highs that should be support. And then when you draw the uptrend from the COVID low in March of 2020 to the October 2022 low, that uptrend comes in this month at about 4793. So you've got three major technical things going on right around that 4,800 area in the S&P. So we've obviously taken a lot off the top in a very short period of time. But did we just do enough of a correction where we've seen it previously, right? You get a big leg higher, you take back half of it, you build a base for a little bit, and then you resume the rally. So I know we've got a lot going on, but have we maybe priced in enough in the S&P here at that 4832 level? But if we take that out and we get sub 4,800, now we're taking out that long-term uptrend that's 5 years in the making. That would be a concern. Hopefully that's not the case. But then I think today's even interesting, right? So what day was it? We talked about April 2nd was the day we saw the chart of the tariffs out of the Rose Garden. That was a major high in the S&P. That high to yesterday's low, well, today's high was half of that, right? So this market is making these big moves, taking back half of it. So my thought is in the next 24 hours, we're probably going back down a little bit, probably halfway between the 4832 low that we made yesterday and the high that was made this morning, which takes you back down around, I think, like 49 or 49.30 or so. So big moves, a lot of volatility, but if the equities can kind of hold together and hold these lows, I think that'll be crucial for livestock trade. It seems like right now, and the problem with livestock, and we'll talk cattle specifically, is that the market's closed at night. So if you went home short yesterday in cattle, and then you woke up this morning and the S&P is up 200 points, well, that's why we opened as strong as we did this morning. But then what happened over the course of the day? The S&P backs off, it goes lower on the day, and then that rally in cattle dies out. Well, the cattle market's now, it's closed. And if the S&P does something big in between now and tomorrow morning's cattle opening, you're going to see the cattle market jump again. And it could be a higher, it could be lower. So I think by extension right now, if you're trading live cattle, you're almost by extension trading equities, but where you're locked out of the market for several hours overnight, where there's a lot that happens. So I think you just have to be pretty careful on how you're approaching the cattle market right now. But we've seen this setup before where you get a big sell-off, then you get the futures where we're at a big discount to cash. And then it's like, well, why am I selling it here when cash is still at this level? So hopefully the cash market can hold together. And then we start to see the futures look like a value again. But that's something we really need to be mindful of, is if the cash market starts to break. I think about, we just saw, earlier in the week, late last week, a big jump in box beef, right? So I think the consumer sentiment, if you look at Michigan consumer sentiment, it's down quite a bit just in the last 3 months. And the last reading was prior to the tariff announcement, right? So consumer sentiment dropping as much as it has, I think is a big picture concern for live cattle. And so I think you could see, again, when we get equity relief, you're probably going to see some relief in the live cattle and the feeder cattle. But that change in consumer sentiment might take a little while to turn around. So cash market's going to be key.
Excellent breakdown, my friend. Always enjoy the technical picture of what we're seeing in this trade. Any final thoughts you would have for folks, whether it be just general risk management thoughts with all this volatility or anything else you would want to mention or reiterate to folks today?
Yeah, I mean, one of the things that we're kind of looking at right now is getting the timing down, because we know that we want to have some calls in place for summertime. But, as anybody that's bought an option knows, if you buy it and then the market goes nowhere for a month, that option is going to lose some value. But I think there's definitely some interest in having some calls as some backstops to do some summer marketing against. Again, we feel pretty strong that we're going to have some upward volatility in corn over the next couple of months. And always the difficult part is, differentiating between your seasonal weather rally and a rally that lasts longer, that actually becomes a problem. And so it does seem like there is potential for a problem this year. So I think the calls will come in handy, right? It'll allow you, I was looking at August short dated corn calls at the $5 strike price. They're going for about 10 cents today. So what does that let you do, right? Corn goes back up to $4.80 or $4.90 or $5. You can do a hedge to arrive, get some physical cash sold. But if we get into a bigger picture weather problem and we do a 2012 type of a move where we just go up, every Sunday night in the month of July, we open limit higher and we go from $5 to $7.50, you can still participate in that move with that little 10-cent option you bought. But that's always the hard part of these summer rallies is, well, I know I need to sell it. I know I should be selling it. It's at profitable levels. I'm just afraid it's going to keep going up after I sell it. And that's where having that call comes into play. So that's what we're looking at is maybe some preemptive call buying before we really start the focus to that weather market ahead of us.
Of course, always want to remind folks that risk of trading futures and options can be substantial. And if they have questions, they should reach out to a trusted individual like yourself, Brian, or the team you have there at agmarket.net. And I know you guys have a lot of resources, and the easiest way is to hop online and get started, right, Brian?
Yeah, just go online, www.agmarket.net. You can go to the Google store or Apple store and go check out the app that we have developed. That may help you with marketing. Get a 2-week free trial of that, and somebody will call you to help you walk through that. But if you want to talk to me directly, it's 815-665-0463.
Brian Splitt, agmarket.net. Always appreciate it, sir. Thanks for joining us. Have a great week. We'll talk to you again soon.
Thanks, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.